I'm here to discuss what might be the most explosive event in XRP's history, as the cryptocurrency market undergoes an unprecedented transition. The XRP ETF from BlackRock's official approval and impending launch. This event is more than just a headline, it's a seismic shift that might change how investors perceive and deal with XRP and propel its price much above $1,000 in the coming years. Insiders and blockchain analysts alike are giddy with anticipation, despite media outlets' attempts to minimize this news. The recent 29,000% spike in XRP trading volume that shocked Coinbase and other significant exchanges wasn't an isolated occurrence. It served as a forerunner to an unprecedented institutional inflow into the cryptocurrency market. Let's start by discussing what an ETF actually implies in the cryptocurrency realm in order to comprehend why this is so significant. In essence, an exchange-traded fund, or ETF, serves as a link between traditional finance and digital assets, facilitating the purchase of XRP by both institutional investors and regular traders without the burden of handling digital wallets or private keys. With trillions of dollars in assets under management, BlackRock is the largest asset manager in the world, making its involvement particularly noteworthy. Their support gives XRP unmatched legitimacy and gives it access to a large financial pool that was previously unavailable to cryptocurrency ventures. The imminence of the launch has been confirmed by insiders who have leaked images of the Bloomberg terminal that show the ticker symbol for the XRP ETF. Although this type of information is often kept under wraps, the disclosure highlights how near live this ETF is. Furthermore, in a single day, Coinbase, one of the biggest and most reputable cryptocurrency exchanges in the US, moved an incredible $2 billion worth of XRP into its vault. This enormous buildup suggests that Coinbase anticipates a sharp increase in demand after the ETF formally launches, either on behalf of institutional clients or in anticipation of building up liquidity reserves for the ETF. A widely circulated deepfake video of BlackRock CEO Larry Fink declaring that XRP is unavoidable is adding gasoline to the fire. Its circulation demonstrates the community's growing perception that BlackRock's support of XRP goes beyond financial considerations, even though it is a deepfake and not an official statement. It is a declaration of faith in XRP's ability to serve as the foundation of the world's financial system. Why then do researchers think that by 2025 XRP might reach $1,000? The debut of the Bitcoin ETF is frequently cited as a comparable. Significant capital inflows helped drive Bitcoin's price from under $10,000 to over $60,000 in a matter of years after the first Bitcoin ETFs were authorized. Although XRP has a distinct use case, it is, in all honesty, possibly more potent in terms of international payments and financial infrastructure. Because of this, analysts predict that after the ETF debut, XRP may see inflows that are up to 10 times greater than those that Bitcoin saw. This isn't just conjecture, you know. In actuality, it reflects the enormous demand for scaled, controlled, and effective digital assets. Because XRP's network is specifically made to enable quick and inexpensive international money transfers. Banks and other financial institutions find it to be very appealing as an alternative to the costly and slow traditional correspondent banking systems. To be honest, institutional investors are becoming more comfortable investing big quantities of money in XRP-backed financial instruments like exchange-traded funds, ETFs, as regulatory clarity has increased, significantly as a result of Ripple's recent victories in its legal challenges. Furthermore, the ETF's influence goes beyond its price. It pushes XRP into the mainstream financial environment by making it possible for it to be included into pension portfolios, hedge funds, and retirement accounts. This change has the potential to drastically improve price stability and liquidity while lowering volatility, which has traditionally put conservative investors off. However, institutions are not the end of the narrative. XRP has already started to get support from the general crypto community. There is a lot of excitement and strategic guidance on how to optimize profits during this crucial time on social media platforms, cryptocurrency forums, and influencer channels. As more investors realize the importance of the ETF, the viral momentum is generating a feedback cycle that raises demand. Let's also look at the technical factors that could contribute to XRP's price spike. High-speed cross-border payment settlement is made possible by Ripple's technology at a fraction of the price of conventional solutions. As a bridge currency, XRP is in a unique position to work in unison with stablecoins, fiat currencies, and even other digital assets. Because of its interoperability, XRP is very appealing to financial organizations who need to effectively manage liquidity across several currencies. The deflationary mechanism and cap supply of XRP are two important aspects that are frequently missed. The supply of XRP is constrained in contrast to many cryptocurrencies with inflationary dynamics. As demand from institutional investors and ETFs grows, scarcity will act as a catalyst for price growth. The circulation supply on exchanges will decline as more XRP tokens are placed in institutional custody and ETFs, pushing the price upward. Looking ahead, this ETF launch's timing couldn't be more perfect. Due to increasing digital revolution in banking, inflation concerns, and geopolitical tensions, global markets are currently in turmoil. With a hedge against the volatility of traditional markets and a window into the future of cross-border banking, cryptocurrencies, and particularly XRP, are well positioned to benefit from this climate. The SEC's approval of the XRP ETF represents a rather significant easing of its regulatory position against digital assets. The continued legal clarity of Ripple has undoubtedly made it easier for regulatory agencies to support financial products based on XRP. To be honest, this might pave the way for further ETFs and investment vehicles linked to XRP, resulting in a varied environment that supports sustained growth.